Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, the 5th of May, 2026, and markets are in a bit of a holding pattern after some of the flare-ups we saw yesterday. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. So as I alluded to earlier, we did see several ships try to cross the Strait of Hormuz yesterday. Apparently, a couple did make it through with a heavy escort from the U.S. That said, Iran continues to assert control over the Strait of Hormuz, and that is the most important thing for traders on a longer-term perspective. That said, the lack of any sort of flare-ups this morning and the fact that President Trump didn't say that the ceasefire is broken, at least yet, has oil prices pulling back slightly. That's supporting major indices ahead of the U.S. Open, but it remains a very fragile situation, and one headline could certainly reverse some of these moves as we saw yesterday. The big news overnight was that the Reserve Bank of Australia did raise interest rates as expected, but it signaled that it would be pausing on continued interest rate hikes. The exact quote was, after this most recent interest rate raise, the RBA Governor Bullock said that we have the space to sit and see what happens. As a result, traders are now pricing in a pause until about September for the Reserve Bank of Australia as it digests the flare-up in the Middle East as well as domestic inflation pressures. Nonetheless, we do see the Aussie generally strengthening, though perhaps not as much as you'd expect after an interest rate hike in normal circumstances. Looking ahead toward today's U.S. session, we have the ISM Services PMI report as well as the JOLTS labor survey, which will show us how many job openings there were last month. Both of those will be released at 10 o'clock and serve as sort of appetizers ahead of Friday's highly anticipated non-farm payrolls report out of the U.S., so make sure you're at your desk then. Today's chart of the day is the US dollar versus the Japanese yen, and here I've zoomed in to a 1-hour chart because we can see some of the post-intervention moves in this currency pair more clearly. You can see the big intervention from above 160 driving prices all the way down to the mid 155s. For at least the last couple of days, every time dollar yen is pushed up to about 157.20 or 157.30, we've seen suspected intervention from Japanese authorities to push it back down. However, at least over the last couple of hours, dollar yen is peaking above that level. And this is what I say is traders are sort of playing chicken with Japanese authorities, wondering how high they can push dollar yen before we see more intervention. Of course, continued intervention every single day to try to push a currency pair down is not sustainable over the long term, but it is notable that Japanese authorities have a large war chest of assets to spend on this endeavor if they want. In my view, fighting these fundamentals with interventions every day or even every week is not something that Japanese authorities want to get into. So it's not surprising that we see dollar yen drifting higher. But if you are trading this on the long side, you definitely want to be aware of the risks that we could see a surprise intervention pushing prices back down. That said, the fundamentals, at least for now, are pointing higher. So it's a very interesting situation to watch as we move through this week, including some of the major economic data we have out of the US, highlighted by that NFP report on Friday. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do just drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again. Best of luck with your trades today, and we'll chat again tomorrow.